All good. So, guys, now that everything is all set, let me just press the recording button and we'll start. So, guys, hello and welcome. And I hope you guys are all doing fine here in our private meeting room as well as on the live broadcasts on various platforms that we are broadcasting. Before we move further with introductions and our work, here is a quick legal disclaimer suggesting all content presented here will be for purely educational purposes. I am not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, then you yourselves will be liable for your profit loss and loss of profit. Now that we are clear with the legal outlook, let me give you a quick introduction. My name is Nirav. I am the admin owner of 50eyes.com, which is a website where I share my market views, opinions, analysis, trades, everything to do with trading. And I've been doing it for many years. I have a decent track record, exceptionally higher than what we consider in the industry standards, touching 90% at times since 2016. As you can see, 83%, 2017, 87.5, 84, 2018, 84, 88, 2019, and 2020, 88. And 2021 is also being tracked. So this is my area of expertise: market analysis, trading, forecasting. And in these webinars, which is what we call applied Elliott wave webinars, I have done 29 of these in public, which is that anybody can join in. So if you are not familiar with my work, you can go ahead and check my YouTube. All these webinars are available here. As you can see, 29, uh, 28, 27, 26. So this is a series we have been doing for a long, long time. And this makes it a good looking number, 30th. So this will be our 30th webinar in the series of these applied Elliott wave monthly webinars that I've been doing. The way we'll proceed is, first of all, we'll look at the chart of WTI crude oil, gold, followed by S&P, Nifty, and BTC. If we get time, we might as well look at some other stocks, possibly. But this is the general trend we will follow, and these are the major instruments that we will track. Now that everybody is able to hear and watch the screens, just one final yes from any one of you, and I will start off with our discussion on crude oil. David, Charlie, Devankar. Okay, there it is. Lina says yes. So I guess everything is all set and clear. Thank you, Charlie. Thank you, Lina. So let's start off with our discussion on crude oil. Generally, the way we follow these webinars is I will look into the last analysis I performed and see how it went. Right, that is the general what do you say protocol we follow. However, in this particular webinar, the thing is that last webinar which was publicly done was done on 3 months ago, right? So, and the next webinar after that, I was working with the another company, so it had to be due to legal obligations made paid. So some of you did go in and watch that as well. It was conducted in association with eLearn Markets. So that went well. It had a good amount of participation. I'm guessing people pay more attention and join in with more seriousness when they are paying for things. But anyways, so that was the 30th webinar, and which was private. And then there was no webinar for the next month as I'm working on a book on Elliott wave. The first draft is already complete, so that's coming along very well. If you guys are subscribed to my emailing list, I'll update you over there. So I believe there won't be much of a point in looking at the last webinar, so I'll leave it for this particular. In this particular instance, we'll leave that idea. So we are now going to look at the chart of crude oil, and as you can see, we have the light crude NYMEX futures loaded. Do keep in mind sometimes I will keep switching from the NYMEX to O and A CFD contract as well. And if you will notice here, the O and A price is 75.861 and the NYMEX futures price is 75.74. So there is a slight difference. The reason being that one is a CFD contract and another is a futures contract traded on the New York's NYMEX, New York Mercantile Exchange. right? So now that we have these charts and I have made everything clear, David says the book will be fantastic. Yes, David, I hope so, and I hope a lot of audience will benefit from it. Okay, guys. So first of all, our point of reference in this particular discussion will be the level of around 7683, which is the 6th July 2021 date and 12:30 IST time. Right. From this point of reference, I recall in the last webinar we were somewhere here. We were discussing, I think this. I don't exactly know. So, anyways, from this point of reference, we have basically two propositions, right? The first proposition being that we are in a flat correction or a triangle correction, right? And the second proposition is the correction, which was wave 4 basically is already complete, right? So let's explore that. Let me just move this chart a little bit to the side. Mark the point of reference. Okay. So the first proposition is suggesting that we have a downward move, right? And this downward move, if you look from this point of reference, is complete over here. Okay. If this downward move as a WXY or an ABC or a WXYXZ, whatever it may be, there are basically multiple possibilities. For instance, the one which I just thought of is that how about we take this progression as a leg, this as a triangle, right? And this as the next leg down. So that will make it an ABC progression. So in Elliott wave terminologies, for those of you who might not be very well familiar with it, a ABC progression is a zigzag, which is in this particular case a zigzag. It could be multiple things, and a zigzag could mean that the whole leg, which started from here, has completed at this point at the C. So if that is true, and if this leg has completed the whole progression at C, then that means this market has clearly made a base. And once the base is formed, then that means the last high at least should be taken out. So in this particular case, our last high is this level around 76.94. So since it is not taken out yet, our current hypothesis, which I'm going to presume as H2, which is basically suggesting straight up. H2, by the way, means hypothesis 2 if you are not really following my work. So I like to derive the market into multiple formats, or not formats, multiple ways the market can process, like hypothesis 1, hypothesis 2. And then we try to conclude if we have a commonality or a strength in one of the hypotheses compared to the other one. Okay. Anyways, going ahead with our hypothesis 2, we are suggesting that this market has completely done the corrective part and then new leg should come up. So there is not much to discuss in it. If this thing has really formed the low here, then that should be it. It's going up and all, right? Everything is good and rosy. And it should at least clear this last high, sorry, 77.04 something on the light crude oil NYMEX chart. It should obviously go much higher, but that's the minimum we expect. However, we are not interested in things which are too rosy. We want to get a more, what do you call, analytical view, or what to do when things are not going out as we thought they would, right? So there comes in play our hypothesis 1, which will suggest that this market has, although completed a leg in the downward direction as an ABC, that is just a part of a bigger correction. Okay. So when I say part of a bigger correction, that basically means that this market is still going sideways. That's what generally a correction is in Elliott wave terminology, sideways movement, generally speaking. So when we say that the market is still possibly going sideways, then we are suggesting that most likely it will remain within this boxed range. That is within the highs and lows of 77 and low of around 61, right? Most common setups that fall within this category are flats and triangles. It could become complex, but that is not something we will comment on right now. So we are going to discuss the most likely scenario, or the most deceptive, not the likely one. The most deceptive scenario in this particular case would be that this market goes on and forms a flat correction, and in specific, it forms a correction of the sort of A down. Let me draw it on the rough hand side again. Somehow it got increased in size. One second, let me correct that. Okay. So Correction we would be expecting, let's consider this is our point of reference. This is the ABC which we just discussed. So let me label that very quickly. Then after forming the C, it will form again three legs up or a corrective structure up. And now the thing with this type of flat correction, which could be a running flat or an expanded flat, is that there is a sort of range expansion before the correction is complete. So basically, in a running flat or an expanded flat, what you will see is after this ABC completes, there is another leg up, corrective leg, zigzag, double, whatever, which goes again in the upward direction, A, B, and C, let's say. But doing so, it breaks out of the last high, right? So the 77 high is broken in general. And if the 77 high is broken, then price action traders get trapped in. They start buying longs thinking that the range is broken, which it is. But in Elliott wave terminologies, once this high is broken, it will go up a bit and then fall back again for a five wave correction, like a one, two, three, four, five, right? So in that particular case, what will happen is most traders will go long at the break of the range, on the real chart, right? I probably should use two different colors, but I think it's not getting confusing, right? So break of the range, you might enter, it will go up a bit, but then it will fall back into the range. So if I were to draw this rough thing on the actual chart, it probably can do something like this, and then back in a one, two, three, four, five, right? So that's the problematic scenario. If things are just gonna go up, then they are just gonna go up, right? Nothing to comment on that. So now that we have formed two particular views of this market, right? Let me just illustrate those views on the actual chart and conclude what we have discussed so far. So first conclusion is that everything is done over here. It's the four, and that's it, up. Second conclusion is it can go up a little bit. Maybe I'll just try a different color, right? How about that? Let's see. So second view will be it will go up a little bit and then fall back within the range, right? So if we look at these two views, and yeah, keep in mind it's not really required to go up from the range that is above the last high. It can very well reverse from the 90% retracement. 90% retracement, I mean 90% of this leg down, right? So it definitely has gone to almost 98 or 99% when it touched this high. So that means it could very well just reverse from here as a one, two, three, four, five. How about we draw that as a another color as well? Yeah. So that will be one, two, and let's make the third one over here. So yeah, so what we have is we have a commonality here between hypo one. Let me select the color for hypo one. So yeah, hypo one is suggesting small up and then down. Hypo two is suggesting straight up, and hypo three is suggesting straight down. Right. So basically, in hypo two and hypo one, we have a commonality, right? So because we have a commonality, you can say that if you take longs, then it's probabilistically speaking a good setup. You will be risking money, of course, because hypo 3 is completely against us. But what it gives us is it gives us an edge on the intraday perspective. So, speaking from a trading perspective, how will we use this hypothesis? If you are going to take intradays, or if I am going to take intradays on this market, then I will keep in mind that there are two instances where the upside is favored. So there are two instances where the upside is favored on a shorter time frame. I'll just look for long setups unless the market gives me a very clear reason to consider the downside, right? So at this point in time, hypo 3 is not confirmed. We don't have evidence for it. So our basic setup is on a shorter time frame, we will look for longs, right? I will look for longs. Of course, you do your own analysis, as I say. And again, I will have to repeat a disclaimer here because I don't want to really take any liabilities for your trades. So my analysis would be I will look for long on a shorter time frame, and considering the analysis even further, as you can see, if we take the markets from just this point, which is the last low around 61.75. By the way, are you guys understanding me so far? You able to match with my pace? A little bit of feedback would be nice. How about you, David, Divankar, Charlie? Thank you, Charlie. Thank you for the feedback, David, Lena. Okay, so now that we are in the flow of things and everybody is understanding, there are few online on TradingView as well. You guys can also participate. I am watching the chat for that as well. And while we are at it, let me just quickly load up the chat on YouTube as well. If it is broadcasting there, I'm not really sure. So two are watching on YouTube as well. So guys, we have enabled the chat there as well. So Vijay is there, Naveen is there, and Prem is there. Yes, business looking. Okay, guys. So yeah, I'm checking the chats from all the platforms now, thanks to the multi-monitor setups. Anyways, as I was saying, on the shorter time frame, our perspective is a little bit different. Not different. Our perspective is a little bit more detailed. That's the precise word here. So on a shorter time frame, I am more in consideration of the view that the wave 4 is still continuing sideways, which was the count which looked like this. Okay. So if we go along with this count, we have already completed the A, B is in progression, and C might follow. So that means this will be the A, the B is in progression, and C might follow after. C should follow afterwards, right? Keeping that in mind, and we also know that wave B in Elliott wave progression is always a corrective wave, could be a zigzag, double zigzag, sometimes even a triple zigzag or triangle. So in this particular case, we are assuming that it's most likely a double zigzag, right? So coming on back to the actual chart, 61.75, a double zigzag will look. We are talking about this part of this hypothetical uh, chart which I've drawn here, right? So magnifying this wave B, what we will see is something like this. Okay. So if we look at it now, this will be your A, this will be your B, this will be your C. Now that we have an A, B, and C, we know that that's what is replicated on the actual chart, A, B, and C. Then there's a correction for wave X, correction for wave X, and then there will be another A, another B, and there will be another C. That is exactly what you can see here, another A, another B, another C. Now what follows from this point onwards is that if the double zigzag is over, then this market should basically fall. For it to fall, we will know it when this channel is broken, right? This blue channel, as you can see. However, it does not look like it is interested in falling. The reason is that this particular part of the chart looks a little bit sideways to me, which is suggestive of the fact that there can be another X and then it can follow through to the upside. So, my personal bias is that this market can go a little bit more up. And if it does that, it will does by forming another ABC, quite likely, right? So keep in mind, I am personally following the count where the correction is continuing. If we are to count this as impulse, that's also possible, but that is not really required because in an impulse it will just go up anyways, right? So the direction is the same. Anywho's coming back to the point, I personally think that it should form X and another ABC. So if we look from this line, X can be forming sideways here as a triangle or something, or it could be complete here. But the fact of the matter is, if there is going to be another ABC, then in ABC you can see there is one leg up and then another leg up, right? Let me switch the color so that it's more visible. So this is one leg up and this is the another leg up. So if that's the case, then we come with the bias that if it breaks this high, right, then we will be counting an A up, B down, and C up. So that means at least if the count is suggesting at least two legs up, then at least on this chart we will see one leg higher. So that also clarifies why I was reasoning with you that there is a bullish case, and I will be personally looking for longs on intraday or shorter time frames, right? So I hope this triple zigzag stuff is clear. So basically, that concludes our analysis. Short time frame, we are looking for longs. Confirmation is above 77. Short term longs are possible there, and we have two hypotheses suggesting upside. There is no confirmation for downside yet, and there won't be any until we see a break of the channel. So, long story short, that's our conclusion for this analysis. So, guys, if you have question, you can post them now. There won't be any more discussion on crude from here. We will move to gold if you don't have any questions. So Neodra is asking on TradingView, which indicator for Elliott are you using? I am not using any indicator, and Elliott wave is basically advanced price action formation, so no indicator is required. At least I don't use any. Neither do I recommend any. I see somebody is typing on here in the private chat. So David is typing something. How about you guys on YouTube? I still see some people are watching there. If you guys have any queries, you can post. Otherwise, we'll move on to gold. Should stay within the trend lines. Yeah, David. Basically, the trend line break is the first sign of possible sell-off or of hypo 3, which we discussed earlier, where there is a straight of sell-off possible. But we will have to look once it breaks the trend lines. Generally, I use trend line as guidelines because I've seen that there are sometimes false breakouts as well. So once the trend line breaks, there will be this can be used as a signal that something to the downside is now possible, and then we will reanalyze. And if we then see that there's a solid case for downside, then we will take the trades. Lina is asking, can we look at the long term count, please? So Lina, I have already done a long term analysis for crude. I think if you check 2 3 of the past webinars, any of the 2 3, I think there will be one where I have done a long term analysis. I'm not sure. You will have to probably scan through one or two of them, a few of them, not one or two, but there is one which I have done in very detail. So we don't want to take the whole hour for crude. I think we have already taken 30 minutes. Yep. So Vijay is saying move on to gold. So okay, I guess there is no questions. Sanjeev is asking, good to see you back. Yes, Sanjeev, good to see you as well. And okay, let's move on to the next chart of gold. We have already given way too much time for crude. Okay, so gold, my personal view, I think, was that a correction is continuing in sideways movement. I guess it is a bit complex, so I'll just remove it. So I recall my 2 months earlier webinar or 1 month whenever we did the webinar was that this thing is continuing sideways, and the range was, I mean, the range is very clear, obviously. And after this, I'm expecting one more down leg before the up move. I think that was one of the main views. So, anyways, nothing seems to have changed for me to consider anything else. Let's quickly look at the chart as well. Let me see. A, B, C, D, E. Well, that is exceptionally clear count for a possible triangle followed by one leg down. Let me see if I have an alternate count. I said C, D, E. That means sideways can also continue. Okay, guys. So see, there are multiple complex counts forming here. If we start discussing them, it can take an hour. So I'll just give you an outlook for the one which you were seeing over here. Okay, so this count basically suggesting this, right? So now it is suggesting this. That basically means, I mean, anyone can make out that after this X is complete, there should be a leg down. So our point of discussion at this point becomes, what is this X, right? If it's not an X, then how will we know that our count is wrong? So again, as I said, there are many counts here which I can actually see right now, but I can't discuss them here. We already have taken too much time for crude, and we want to discuss other things. So, anyways, moving ahead with this count, which is the main count we have been following for many webinars, or at least for the last few webinars, I think that this X might be continuing as a triangle, right? If it's continuing as a triangle, then a triangle is a five-wave structure, and it looks like this. and the legs are called A, B. Let's say dot A, dot B, for the sake of nomenclature, and dot E. So this is one of the main counts we are following. And if this is really the count, then that means this is your dot A, this is your B, C, D, and E. And obvious enough, once this, there are multiple setups for triangle as well. I'll just show you the most conservative one here. Main setups are you wait for the BD break to go short, and a better or more conservative setup is to wait for the wave dot B's break out to the downside and go short. So these are the two main setups. Keep in mind the BD trendline break could be a false setup, so it is what we call aggressive, and the B break is a more conservative setup. So depends on trader to trader what you want: more confirmation, less profit, or less confirmation, better risk to reward. Right? A matter of its own discussion for an hour or few. Leaving that to that, if this actually is a triangle, then I guess everybody can track it on their own. There is no further discussion required, right? Moving on to other things, if it's not a triangle, then it could be some complex formation. And as I said, a complex formation, it could be just anything. And in that particular case, it will propagate within this sideways range, maybe for a few weeks, days, or whatever. I don't really know. So the second analysis or suggestion will be that it could continue the X for a long time in sideways range, blah blah blah, right? It will just keep going sideways, right? So that really doesn't make much of an analysis, right? If it's going to propagate sideways within that range, then you know that the X is continuing, and you will trade it accordingly. E with the stop loss, David, that would be rather risky, because if you are very sure it's a triangle, then you can do it. But in this particular case, uh, unless, see, the thing with triangle is these are two trend lines, right? You can draw them literally anywhere, and everything will look like a triangle, unless you see a real break from the E. It could be many other things, and believe me, it is generally many other things. Things are not generally as simple as over hypo one. There are generally 5-7 hypotheses. Not I would not say 5-7, but at least 3-4 hypotheses at all times in a complex correction, right? So to properly analyze each of them and form multiple charts and then trade is a different thing. So if you were to really say that this is an E and I'm going to sell here, then you are just basically drawing two trend lines, right? And then you are selling. What happens is maybe it will go a little bit down, and what if it then shoots up again? Because as we said, if it's really an X wave correction, then it can really just be propagating within the sideways range, right? So your trade will get nullified rather quickly. So that's why we will be preferring the more conservative setup. I will prefer the B break, and the BD trend line break is also a good setup. There are other ways where you can use position sizing to your advantage, but let's keep our discussion a little bit less complex and carry on. So yeah, as I was saying, the downside setup is rather clear. I have already told you, right? Upside, it can propagate within this range. I don't have anything to say about that. We will see how it goes and reanalyze and trade according to that. So we have a setup on the downside, right? Upside is unclear. Downside triggers, Last thing is, if we are completely wrong, then first of all, we don't have any upside setup yet. So that won't be a problem. You will just be out of this market. That's one thing. Remaining out of this market and losing a trade is not much of a deal if you're analyzing a few charts, 5 6, let's say. But I'm not discussing any bullish count at this point, because I don't really see any. Unless this market really breaks this high of whatever this level is, 1916, I won't be really seriously taking it as a bullish count at all for now. So for bullish outlook, I'll just wait for it to break 1960, which I think is unlikely at this point in time, right? And because it's unlikely, we'll just say that go with the bearish setup we have just discussed, right? So of course that's concludes our analysis on gold. If you guys have any queries, please post them in the comment section. Otherwise, post clear and we'll move on. So still viewers on TradingView as well as YouTube, private audience. At least I want more participation from the private audience. uh, Devankar is saying clear, Lina is saying clear, David is we get present. Yeah, David, there is no clarity as we just saw. Charlie is clear. Okay, so I guess other participants must also be clear. In that case, let's quickly head over to the chart of everybody's dear S&P 500. Okay, S&P's 500. There it is. Okay, that is not the chart I'm following, right? That is not the chart. Let me load the chart I'm following. Yeah, that's it. So S&P has been in a side corrective movement, right? So let's see. Let's define our point of reference, which is this high around the level of around the level of 45, 50 something something, right? From this point on, this by the way looks like crude. You remember we were discussing crude, and I was saying if the four is complete here. So this does remind me of that. However, there is a few differences here. We'll look at it now. The first analysis is, as we discussed in the crude, that the wave 4 is already complete. That does not really suggest anything more to be discussed, right? So I have a few questions from YouTube. Let me just check them. So Nifty, okay, everybody wants Nifty. So guys, Nifty will be coming after S&P. So just hang on there. Okay. So anyways, 4 is here, right? And nothing to say, right? But unless there are some other things which I'm thinking here. One of it is that this does not really look like to me like a very convincing fall. Wave C generally is a little bit more bigger. So I will go with the idea that it is possible that it is forming a sideways. One second, guys. Yeah. So I will go with the idea that it is probably forming a sideways correction. We cannot ignore that within this range. Basically, what I'm saying is think of it like this: first leg down, correction, and then a leg down. So let me draw it on the rough end. First leg down, correction within some range, and next leg down. So this particular analysis, I think, is rather having a weight right now. Okay, and how will we look at it on this chart? First leg down, correction sideways, then down, range of the correction, this box. Okay, so this is a bearish outlook, right? And in this bearish outlook, we have one more down leg remaining, and that's the bothersome situation here. If that really is getting followed, then calls won't really be making you much money, and we will come to know it soon enough. One of the clues will be that this leg will lose its strength quite soon. It will give a sideways move and then a weak up leg. That's one of the clues. Not always going to happen like that. So that's the main thing which I'm thinking of right now in S&P, right? In Elliott wave terminologies, by the way, you will call it a W, X, and Y. And as we guys know already, X can become as complex as it wants to. That's my main outlook. So I'm not basically convinced about the longs just yet. Okay, just yet. I think more downside is coming. By the way, because it's already here on chart, we were able to catch this leg as well. Whole leg down. You can see the P dash S written over here. That's sell alert, possible sell. So that's our main count, that we are not clear from the possible bearishness yet. I will be more convinced about longs after I have seen some more price action. Good indication would be a break of this high, right? But then again, break of 4486 could just be a range expansion. So basically all I'm saying is that bearishness has not completely is not probably completely over. So it's a wait and watch market basically. There is nothing more to add here on this. That you can say is, let's say, hypo 1. That you can say is, let's say, hypo 2. I will just wait on this. Any questions on this chart, please type them, or please type clear so that I know you guys are participating and understanding whatever I'm saying. Lena, Charlie, David is already typing something. How about you guys on YouTube? Prem, Naveen, Vijay, still with us? Sanjeev, Nirad on TradingView. So guys, let me know if you guys are clear on this discussion on S&P. If there is any query, type it in or just type clear. David is saying clear, thorough, exactly the same sideways volatility and one final fall. Charlie is clear. So yes, I guess then let's move on to the next chart, which will be of Nifty 50. Let's just discuss Nifty first. And yeah, before we move on to the chart of Nifty, one small thing I'll point out: I am putting up some new broadcasts on TradingView, which is in.tradingview.com in video ideas. Right? They are also broadcasted on YouTube. For instance, look at this one. 2 days ago, I made a quick analysis of Nifty and Bank Nifty. So I'm hoping to make this a more regular thing. If I see good enough participation, for instance, the views here does not seem to be very motivating. So more participation will be really important if the guys who are following my Nifty counts are interested in more updates like these, right? So anyone who follows my Nifty analysis, I would suggest share the YouTube link or the TradingView link. If you visit in.tradingview.com in video ideas, you will find this same broadcast, right? Or video. So would request you guys to share it as much as you can in your circles, WhatsApp groups, Telegram groups, colleagues, whatever you feel noteworthy. So let's look at Nifty, and if we get time, we will look at BTC as well, right? So Nifty. That's Nifty Bank, and there it's Nifty. Yeah, David. Actually, the video ideas are so many that it gets what do you call invisible in the whole mess of all the ideas. So in.tradingview.com is where the video idea will be, or you can just visit the YouTube, right? But as I said, unless there is participation on that front, I will not be considering it further. So I'll do it for a few days and see how it goes. Anyways, getting back to the chart of Nifty's 50. Let's see what count we have: one, two, three, four, five. So yeah, we have a one here, a two here, and three here, a four here, and a five here is one of the main counts, right? If the five is complete here, then that means this is just gonna go down, down, down. Second possibility is that 4 really is not here, because wave force can become complex and it's still continuing here. If the 4 is continuing here, then it will do so as a flat correction, right? If it's doing it as a flat correction, then you will just count a wave 1 here, dot 1, let's say, dot 2, and dot 3, dot 4, and dot 5, right? So now basically what I'm trying to say is, if the 4 is done here and 5 is done here, then that's it. That's a bigger fall, not a very big fall maybe, but at least one more leg down, correction and then leg down, right? However, if the 4 has completed itself over here, or maybe has one leg down remaining. By the way, I have some small short positions, so maybe this one leg down is still remaining. That's what my expectation was. But overnight, S&P has gone up and Nifty has on the SGX gone up. So I don't really know what it will do. So, anyways, if the 4 is over here, then what to do then? So in that case, we wait for a break of this trend line. Okay, that's actually a rather clear setup. I will wait for a break of this trend line. That will confirm that the longs are here. Once we are confirmed that the longs are here means that this is 4 here or continuing, and then there will be a clearing of the last high, which was around 18,000 something something, 17,960 by the way. On the futures, I think it touched 18,000. I think. So, anyways, coming back to the point, if we see a break above this trend line, which is actually an important trend line, touch, touch. So, two touches makes it not very important, but rather important because we don't have anything more than two touches so far. It was by the way our point of reference. So, move above this trend line is important to confirm that we have more bullishness, right? Unless we see that, it could very well be forming sideways and down. And by the way, noteworthy point here, if it does go sideways and down, it is resembling what we might be seeing on the S&P, or one of the counts of the S&P, by the way. And one more noteworthy point, the correction here started, one second, around 24th September 21, and on S&P you can see it started on 7th September. So basically what I'm pointing out here is that the correction on S&P has gone and dragged on much more in time compared to Nifty. So it won't be a surprise if it really decides to continue the sideways move and then fall once more, or maybe at least continue the sideways move. Okay. So that's our conclusion on Nifty. Very clear setups on both sides, right? I don't think anything more needs to be explained here. Let me know if you guys are clear on it, and we can quickly look at BTC USD. David is saying clear. Yep. Nice response. How about the guys on other platforms? YouTube, TradingView. Lina is also clear. Okay, I believe the broadcasts on other platforms are always delayed compared to our private network. Okay. So yeah, one more request, guys. When we do more webinars, I would like more of you to participate in the private network, and the reason is that the broadcasts on TradingView do not come with the notification email. So most people, even if they are interested, they will forget that there is going to be a webinar at so and so time, so and so date. But if you are in the emailing list, then you will get, and you register for the webinar, you will get two or three emails reminding you that the webinar is going to start in 1 hour 15 minutes. And at the end of the day, it comes to participation. If I don't have any participation, then or less participation, then what's the point of doing them, right? So those of you who are watching on other platforms, I request you to keep that in mind and follow through accordingly, right? For just 1 second, I'll just show you where the emailing list is. So you can subscribe to the mailing list by going to 50is.com / subscribe emailing list, right? And you will receive notifications for upcoming webinars. And once you register them, this is by the way the registration page for the current webinar. So once you register for them, you will then receive notifications. And as I said, participation is the key. Without participation, there is no motivation and there is not much point. And so far, from what I have seen, the participation has sort of reduced. I think most people are comfortable watching it later on as a broadcast, which generally is sort of not good. Anyways, stopping my blabbering on the subject. Before we discuss the chart of BTC, let me first quickly introduce you with some of the offerings from my end. So one is the video course which I have, Elliott Wave video course. This is as a as I said, a video course, so you can watch the lectures, 5 hours plus content, lectures with Q&A section and everything, right? It is going to see an update very soon for 2021, so more lectures or replacement of past lectures will be done. Although it is very updated, over 4 or 5 years, I have updated all the lectures and considered all the questions that people have. Yeah, David, that's a good point. Some people are not having a suitable time when I'm doing the webinars. But mostly it suits. People join from America, you are joining from Australia, people are joining from India. So I don't think there would be a much of an issue with other time frames. Okay, getting back to the service introduction. This is the video course. It is there. You can get into it. And the more serious offering or offering for more serious traders is the training program LT. which are personalized classes, which are done one to one. Charlie is one of the students who is currently, by the way, in one of these classes. So these are much more involving. You get to talk to me one to one, basically in face to face meetings, and you can draw on my charts, ask questions. And here the focus is really on getting the concepts to a practical level. So once you are done with these classes, you will be applying concepts. You can see the testimonials from past students or one of the videos from one of the discussions where we are discussing how the students made profit, and everything can be seen here. So this is a more serious commitment, and I am planning to start the coming batch from October 15th. So if any of you guys are serious, or if you think one of your friends or colleagues are serious about learning the profession of trading, then they should contact me using this form of training program LT. I'll make sure to deliver the details. So that's about it for introduction of services. Now let's head over to the chart of BTC. Let's see. BTC. By the way, in our private Slack group, we were able to call the last high, which was around 61,800. And as a matter of fact, one of my students was having a very huge position. He was carrying it from much lower levels, like extremely huge position, and he booked some part profits near this level. So we were literally able to catch the top, which has remained the top for April and what is it, September, almost half a year. I think it will become a half a year soon. Anyways, getting back to the discussion now, the plain idea over here is this. But I think that this count is failing us now, most likely. And the reason is that this leg looks rather strong to me. Okay. If this leg takes out the last high, then new possibilities open up. So this is the point to consider. One second. Sunit is asking, did you catch 30,000 bottom? Sunit, by the way, if you watch my past videos, I will actually like to point that out. I've often been told by my students that I don't really advertise my skills much, although I don't think what remains after showing a 5 year track record of almost 90%. So, anyways, what I was trying to say was, yeah, if you watch one of the past videos, you will find that I have actually predicted this low. I specifically said that 3,000 to 5,000 will be a low, will be a range where the low might form, by the way. I don't like to make specific statements, right? And I think the prediction was done here or here. I don't really recall that exactly, but you can very well go to my playlists, and there will be a Bitcoin playlist. Yeah, so these are the times when I used to make videos separately for each instrument per week basis. Now I don't get that much time, so what I do is, oh, this is somebody else's ad running. One second. So now that don't get that much time, I generally just make this one webinar. So these are the two videos. One is in October 14, 2018. The second is in July 1st, 2018. So you can very well check. Oh, there it is. 5,000 to 3,000. I have done that when the market was trading around. Let it become clear. Yeah, 1080p. Let it load up. Yeah. So the market, I think, is trading around this green level 6350, and I was able to predict this level 3550, whatever that is, right? Now, I don't know if we discussed this level in the past video as well, but anyways, you can check that on your own in your own time. As I said, you can just go to the Bitcoin playlist and see that past forecast. And as a trader, I feel forecasts are not that healthy, right? It's more like what you are going to make in the next 2 to 3 days, and then find the next trade for the next 2 to 3 days. And the percentage returns you make as a trader add up instead of trying to be a forecast. I think forecast is more of a tool to show off the skills, but it does not necessarily mean you are a trader. So, because I'm primarily acting as a trader or involved in the markets all day long. So I believe forecast can sometimes hinder your performance as a trader. But anyways, getting back to our analysis of BTC now, actual concept or the actual idea is break of this trend line would suggest that this may have been a low and more upside is possible. As long as the market remains below this trend line and 5,200, 52,500 level or 52,680 level, you can check the specific levels at your end. This, by the way, is a data provider as Bitstamp. So each data provider might have a little bit different high. Okay, because this is Bitcoin, it's not a very centralized market. All brokers will have a little bit different pricing. So getting back to the discussion, first the break of this trend line and then 50 to 680 something level would be a sign that more upside can be seen. What do I mean by more upside? I basically mean that 90% retracement of this level can be seen, right? We can draw the 90%. It will come to, let's see, it will come to the almost level of 61,560 something. Or will it? Let me see if I've drawn it by taking the exact points. Okay. Yeah, so there we go. 90% is coming around 61,300 something something, right? Let me remove this. Yeah, 61,300 something. So basically, the idea at this point in time is if this resistance trend line is broken, then we can see 90% up to 90% level. That's my expectation. Okay. Unless this level is broken, the idea of downside movement remains, and it remains quite solidly. Okay. But because this particular movement, which started, I think, yesterday on 29 September, 2 days back, because this movement is looking rather fast or impulsive nature, I think the idea of upside cannot be relegated. So I'll watch out for this trend line and this level, consider longs, right? And a shorter time frame perspective, we were actually able to take these longs. I think this was the chart. Let me see. In minutes. Because I'm tracking all these things on the Slack group, right? So there it was. Yeah. We were able to catch this because this green channel was broken, and I had already posted about this a few days back when the market was over here. There were two setups at that point in time. One was close lower than C low, triggering shorts. Higher was channel break. So, anyways, long story short, we were able to catch this up move, but for this up move to continue, we need further confirmation. So, those who are already long can just trail their longs, right, according to their entry. But I will not be interested in new longs at this point in time. That's about it for this analysis, right? Downside cannot be relegated yet. Upside triggers, So that's the setup. Let me know if you guys are clear on BTC. Everybody can write clear, I believe, at this point. After all, we are at the end of the webinar, right? So TradingView participants, YouTube, and of course our private group or private webinar platform. Lena is saying clear. So is Charlie Divankar. Can we just do Reliance? Divankar, I would avoid that at this point. I have a commitment I've already made. I was supposed to meet somebody at 8, and it's already 8:03 here in India. 3 past 8, basically. So let's leave it for some other time. So, how did you guys enjoy it? I believe, yeah, some participation from TradingView as well. So, guys, I think that's it for this webinar. I have a rather simple request here. Please share this webinar as much as you can in your forums which you are following on the internet, your Slack groups, your WhatsApp groups, your Telegram groups, your friends, colleagues, because I've been doing this for so many years. And I see a lot of people who don't have any credible record or anything, but they still have much more following. So I guess something is remaining from the marketing end. So I would request you guys to do the marketing part for me. Right. So that's one request from me. Thank you, Lina. Thank you, Veer. And nothing else. If I see more participation in the quick update series, which I'm making regular updates for, I'm planning to make regular updates for Nifty, Bank Nifty, then I might add gold here as well, possibly, right? So then again, the duty lies on you guys. Share the TradingView link in.tradingview.com. I post the Nifty update, right? And if I see participation there, I will make them more regularly. I'm planning to do it them once or twice or thrice maybe in a week. So it can go to once per day as well. Who knows? So yeah, guys, that's it. Keep sharing and keep participating in the webinars. Services, everything you already know. I don't want to go over them again, right? But if you want to participate in the webinars and get in touch with me and remain subscribed, then remain subscribed to the emailing list, which I did mention. It is important because if I have some news, some new announcement, or some new launch, like I'm working on the book right now on Elliott Wave. So in the emailing list, I can send you guys a chapter or two and get your feedback. But it becomes impossible if you guys are going to come in only on these random platforms like YouTube, etc., etc. So I would request you guys to do the same, and that will be it from me. Thank you guys for participating on TradingView, YouTube, and most importantly, my private webinars group. Thank you, Charlie, Veer, Lina, Dibankar, David, Neodra from Trading Views, Sanjeev, Crypto Grizz, Shuad, always, Ronit, and Vijay and Naveen from YouTube and Prem. Thank you guys. See you guys soon. Thank you, Lina. I hope the book is great and I hope there's a lot of audience who will benefit from it. Let's end this webinar now.